Has the coronavirus affected your trading? Well, aside from the big thing, right? Like the volatility that we're all dealing with, the markets collapsing. Aside from that, and switching gears into shorting and day trading and capturing a lot of that momentum to the downside, the big things that the coronavirus has done to affect my trading are first dealing with slow broker transactions, right? Like there's been a lot of lag among brokers across the board, right? Like the brokers that I use are Thinkorswim, Interactive Brokers, and Robinhood, and they have all experienced some lag, right? So factoring that lag into trading and transactions and how I'm going to position size, that's how that thing is affecting my trading. And then understanding too about the circuit breakers, where if you get a down move in an index of 7% or more, your trading is halted for 15 minutes, and then you get another breaker. I think at a move of 10% down. Gotta double check that, but yeah, like there's all these circuit breakers that are happening that are just halting trading. That affects how you're going to trade. The overnight risk of a potential gap up or gap down against position too. That it's a lot more difficult to hold the position overnight. Difficult, not impossible. So the question becomes, well, how can we adjust to these things? Well, what kind of strategies and tactics can we use? And what I've been using has been to adjust my position size for these things. So if I am going to expect a gap against me, then I'm going to reduce my position size. If I'm typically risking 1% on a trade or 2% of capital on a trade, meaning that if it moves against me and I'm stopped out, that I'm out 1 to 2% of my capital, then that's getting reduced from 2% to 1%, from 1% to 0.5%, and possibly even less to capture these moves. And the good thing about this too is that in such a strong trending market, you can make, in the same amount of time, with 0.5% of capital, or even with 0.25% of capital, what you would make with positions twice its size, right? So if you're trading with 0.5% of capital, you could make about the same amount that you would with 1% of capital, and you're just making sure that you are protecting your downside. I think that that's the big concern here. How do we protect against our downside, whether you are trading stocks or you're trading options or trading any other market too? Well, when you're having these kind of wild swings, and the way to do it is through your position sizing. And when you're seeing this mass volatility, cut your position size down. Use half of the position size that you normally would, so that way if you do get a giant move against you, you're not blowing up. The idea is not to just make huge money on this trade, it's to stay in the game long enough so you could continue to compound and win the long game, right? Like, well, when people talk about winning the long game, they don't just mean like, oh, I'm gonna put my money into the market and wait 5 years or 10 years. That's not what the long game means in this case. In this case, what the long game is trading where you're not trying to make your millions tomorrow, right? Like you're trading to stay in the game for the longest period, so that way if you're winning consistently, those consistent gains will compound, and that's how your equity curve is going to go up and up and up. If you trade the other way, where you're just trying to win for tomorrow and you're trying to dig yourself out of a hole, or if you're scared or whatever it is, that's when you start to compound losses and it becomes a nightmare. So those are the two big ways that the coronavirus has affected my trading. The slower brokers, circuit breakers, and a third way that the coronavirus has affected my trading too is that my daughter has been home from school the past week and a half now, and it will be off next week and possibly for another couple of weeks depending on what happens. And so that affects trading, and thankfully my wife is home as well and she's able to watch her most of the time. But it's figuring out, well, what's the trading schedule actually going to be, because if you are a trader and you're day trading especially, you need this block of time to be uninterrupted because you're so dialed into the market, you're in a state of flow, and it's working out those trading times with your family to whoever's around you, because now everybody else is at home, that hey, from this time to this time is going to be trading time, and to have that real discussion with them. And it might be a negotiation too, where you might need to adjust what your trading time is going to be, and that's okay. This is a new thing for everybody. This is an adjustment period for pretty much everybody. And during an adjustment period, we want to start taking our time. We want to trade smaller while we're adjusting to this new environment. And then when we finally do get into more of a routine, more of a state of flow where things are starting to move better, then we could start to size up again. But it's the same thing. It's very similar to what we were saying before with dealing with the brokers and the circuit breakers too. It's about managing risk. So as you're adjusting to new trading hours, having family members at home, having new distractions that weren't there before, reduce your position size while you're adjusting to whatever your new schedule is. And then once you start to get into a flow state and start to find your rhythm, that's when you could start to think about increasing your size, but not before then.